Hello, I'm Alan Kohler, founder of Eureka Report, now part of Intelligent Investor, finance presenter on ABC News and columnist for The New Daily.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
And we are
the Money Café. Back in the cafe too.
Back in the cafe in chilly Melbourne. It's 2 degrees.
Oh, yes. But yet we persevere for our listeners.
We do. Well, this would have been a good day to stay on.
No.
Stay on Zencaster.
I don't reckon I've done this in a cafe for like four rounds, so It's good to be back.
It is. And before we get on to Nvidia, can I just say that the Chanticleer 50th anniversary lunch last week was great.
It was pretty cool, wasn't it?
And it was well organised, and you did a good job asking the assembled chooks questions.
Yes, thank you. Yeah, no, it was terrific. We had really great feedback, and it was a really sort of special day. And I think our friend Robert Gottliebson, the original chook, is an absolute marvel, and I think it was great to see him sort of fated a bit too.
It was.
It was cool.
It was great, and all the Chanticleers kind of marvels in a way.
Yeah, absolutely. Absolutely.
So one of the things I was asked by your good self was,
yes.
In fact, you asked me who was the biggest rogue.
Yes.
That I had to write about.
Yeah,
right?
and your answer was awesome.
And so I kind of I talked a bit about Mark Clarkson,
yes.
But I didn't make him the biggest rogue.
No, he was runner-up.
Mark Alfred Clarkson was runner-up. The biggest rogue was Frank Nugan.
Yes.
Who died in 1980, allegedly by his own hand, but in fact there were no fingerprints on the gun.
Yep. What a mystery.
Yes, apparently. So just on Frank Nugan, by the way,
yeah.
A friend rang me up the other day to say that something you don't know about Frank Nugan is that there was a paper bag present at the murder scene, or the
crime scene,
the crime, whatever, the suicide scene.
Yeah.
That did have his sandwiches in it, and in the paper bag was a business card from the director of the CIA.
Oh yes, now. That's interesting because I did go down a bit of a Nugan hand rabbit hole.
Did you?
And the CIA comes up a lot.
Yes.
Was Mike Hand a CIA operative or something? Something.
That's the suggestion. Because he took off and was tracked down in I think Chicago or
somewhere,
Oregon or somewhere,
Midwest of America.
Anyway. I just wanted to tell you that Mark Clarkson wrote to me.
He did
on the weekend.
Yes,
and said, "I'll read the email,
please."
I'd hope that Mark Alfred Clarkson, rogue, was not the only highlight of your tenure as Chanticleer. Not only was I acquitted of murder, but I was not guilty. The lie detector tests do not lie. There was a charge designed to cauterise the takeover bid for Watts Holdings. It achieved its intended purpose. Brilliant application of what became known as the Melbourne defence by Sir Lawrence Muir, then head of Potter Partners. Now, I remember Laurie Muir.
Yeah.
And there was a Melbourne defence, but I didn't know it had to do with murder.
Yeah.
Anyway, my later imprisonment for fraud, I was actually convicted of theft. The charges were more than a little misconceived, was perpetuated because it was widely believed, it still is, that I got away with murder. Again, more than a little misconceived. Anyway. It was nice to hear from him.
Very nice to hear. And I should, if you'll indulge me, Alan, there is a Chanticleer podcast that we do every week. And the latest episode has sort of excerpts from the Chanticleer lunch. So if you want to hear a bit more about what Alan and Bob Gottliebson and all the Chanticleers of the past said, there's a little taste of it in that podcast.
Excellent. Well, there you go.
Including the great story about Mark Alfred Clarkson. Yeah.
So now Nvidia became the world's largest, or America's largest company.
The world's most valuable company. $3.34 US trillion, which is about 6 trillion Australian, I think. 5. Yeah. Now, I don't find it that surprising that Nvidia would be the world's largest company. It's sort of been, growing. What I do find stunning when you sort of sit back and think about it, it's up 43% in a month. Now, usually these sort of companies get hit by the law of large numbers. It's just hard to keep growing. But this is amazing what's happening here.
Yeah.
It is stunning.
Yeah, and it just shows. I read on MarketWatch this morning that the AI technology, a pylon is the largest sort of long only. Crowd. What's the crowd?
Crowded trade. Yeah,
crowded trade.
It's the most crowded trade ever. Yeah,
it's unbelievable. I mean, everybody's into it. Everybody thinks that AI is going to be phenomenal.
Well, you can't not be into Nvidia. I mean, put yourself in the shoes of a fund manager in Wisconsin, and he's trying to beat the market. If you don't own Nvidia, you got no hope.
Yeah.
So everyone's got to be in, and so that's the question to me, Alan. Is this Nvidia's growth is amazing? Is it getting emotional? Or is it still trading on fundamentals?
The thing is that Nvidia's financials so far support the price.
So far, do they support the growth though?
Well, they support what's happened.
Yeah, they support what's happened. Yeah.
So that therefore it supports the growth. The question is there any left?
Well, yeah. I mean, surely a company with margins this big, begets competition. That's capitalism, right? So I don't know. Yeah.
No, it's just I was thinking that in the late 1990s, everyone thought the internet was unbelievably huge, and it was going to make millions and billions of dollars for everybody. And it turned out it is huge.
Yes.
The internet did change the world, but everyone got a bit carried away right at that moment.
Yeah. Yeah.
So you do wonder whether AI will end up being something like that.
Yeah, I don't know. I sort of think a lot about that. And I think about Apple's announcement of sticking AI in the phone and Microsoft sticking it in PCs.
Yeah.
Is there a danger it just becomes commoditized?
Of course. That's what's going to happen.
Yeah.
So everyone's going to have AI, right?
Instantly makes it less valuable.
Yeah, well, sure, but it means Nvidia is going to make a lot of money.
Yes.
Because
everyone's got to have it.
You've got to have the chips,
yeah.
right? Everyone's got to have the chips. Yeah.
It's amazing story. I can't think of anything quite like it. I mean, I take your point. There were some crazy jumps in the .com era, but not off this bigger base.
No, that's right.
Like it's the size of this thing. It would have to lose. It would have to lose 73%. If it went down 73%, it would only go back to the price it was at the start of the year.
That's amazing.
Crazy.
Okay, the week's other big event is interest rates didn't change. So I don't know. That's not a big event. It's entirely expected.
Did you listen to the press conference?
Bits of it, but I didn't hear that. Did you listen to the whole thing?
Yeah. I mean, Michelle Bullock has got very exceptionally good at saying nothing, and
which is the job of a central banker.
Yeah. I did. My ears pricked up with her comment though that she said the narrow path is getting narrower, and to me that says that they are worried that they're just not getting on top of inflation, and they might need to deliver one more rate hike. Michael Stutchbury was at the Financial Review's editor-in-chief, and he sort of asked the question of Bullock, so what if you have to do another rate hike Christmas time or something? Like, wouldn't you be better, the implication was, wouldn't you have been better to go now and, if you're worried about it, snuff this concern out? And she didn't really answer the question as you'd expect. But it is a good point.
Well, because they don't know whether they need to go.
They don't know, yeah.
That's the problem.
But now I think this is probably the third or fourth meeting in a row where she's sort of gone, oh, geez, we were close to.
But she did admit it. She admitted that they considered hiking rates and they did not consider cutting rates.
No. So I think, you're worried about something, I don't know. Do you act? It's a tough one. I just think, I think what Stutch was trying to say is that the blow of a rate rise, the later the rate rise comes this year, the harder it'll hit. Because it'll be such a shock, such a gut punch to the households.
Yeah, I know. Of course. Yeah. It would be a gut punch now.
It would be a gut punch now, but it having left it for so long and sort of assumed they were on top of it, to then go, oh, no, we got this wrong, oof, that's going to really hurt.
I'd say the reason they're not is because they understand, we all know that the only reason we're not in recession is because of immigration.
Yeah.
And so, in some ways, in that respect, we kind of are in a recession now.
Yeah. We've been one for a year.
Yeah.
Yeah.
That's right.
Yeah, it's a weird economy. And look, I have plenty of sympathy for the RBA at the moment. I mean, I think, there'll be criticisms about their forecasting ability, but does anyone know what's coming next?
And the other thing is, I really applaud their effort to get inflation under control without putting unemployment up too much.
Yep.
I think that, I think that's a really creditable,
noble
thing to do. It's great, and good on them for doing it.
Yep. Good on them for being transparent about the reasons too.
Yeah.
Yeah.
So I mean, they've made mistakes in the past, but I actually don't think they're making a mistake now.
I saw a good question from Deloitte Access Economics yesterday. What would you prefer, a recession and rising unemployment, or inflation staying a bit high for a bit longer? It's a fair point.
Exactly, and that is the point. Yeah. I mean, okay, so inflation stays above 3% for a while. Big deal.
Yeah.
I mean, inflation's actually coming down. I had a graph on the news last night showing that inflation is going to be below 3% later this year because of the electricity rebates. So Westpac's worked out that inflation, the CPI in the second half of this year will be under 3%.
Yes.
But only because of government electricity rebates, and it'll go back above 3% next year.
And the RBA's not going to take that into account anyway.
No, that's the point. It won't. But it'll still. I mean, I suppose it shows that we're close.
Yeah,
it's close.
Good point. Hey, it's a big day for you tomorrow, Alan.
Why?
Guzmán Gomez floats.
Oh yeah.
Your favourite Mexican fast food company, still waiting for your ambassadorial role.
Yeah.
And the life VIP membership.
Lifetime burrito bowls.
Have you looked at this? Do you know how it's going to go?
I don't know, actually. I mean,
I think it's going to be quite strong.
You mean it comes on the ASX tomorrow?
Comes on the ASX on Thursday, yep.
And, so do you think what's the float price per share?
Float price is $22. It's a heady valuation. Depending on what metric you use, it's either 32.5 or 38 times earnings, which for a food business is big. This is an Nvidia.
But doesn't the old axiom "never buy anything from private equity" apply?
Possibly, yeah. I mean, look, I think there's not many shares being offered here. It's a small. It's relatively tightly held, so I think it's going to go well. I think the float's going to go well tomorrow. I think what fascinates me about this float is I have never seen the market lose its mind over an IPO as they've done with GYG. Just floats can be polarizing. Private equity venture capital floats can be even more polarizing, but the vitriol, the emotion is just amazing.
Where's the vitriol come from?
Oh, bulls are like full on in their belief. Bears think this is the worst thing that's ever happened. I just can't remember a deal that's been quite as divisive.
Emotionally polarizing.
Yeah. So anyway, watch out for it. It'd be interesting to see how it goes.
Yes, indeed. The other question I had for you was, why did Brett Woods say, "You can't trust me"?
Yeah, this was. I was listening to Brett Woods is the CEO of a company called Beach Energy. Sort of
that's controlled by Kerry Stokes, isn't it?
Yeah, the Seven Group, Stokes' company Seven Group owns 30% of it. They've been battling along. They've had a few ups and downs. They've got a big gas project in Western Australia that's basically run well over cost and time. And so basically Brett Woods has come in from Santos, trying to reset the joint. And, he was asked on this strategy update yesterday, would you consider M&A? And he said, I don't think you can trust me at this point in time. I've got to get the business right, cut costs, get the operational performance before I'm ever even entitled to think about M&A. But it was quite a striking thing when you hear a CEO say, I don't think you should trust me at this point in time. My ears pricked up.
Yeah, well, I thought that was interesting. Yeah. That you picked that up. It was good.
Yeah.
Excellent.
Want to do some questions?
Yeah, let's go to questions. And before we do, let's hear a quick word from our sponsor.
In today's uncertain economic landscape, those who succeed are the ones armed with the right knowledge. Join our exclusive webinar, Best Buys and Biggest Risks in 2024, on Thursday, June 20 at 2 p.m. to learn from three of the most respected names in finance. Alan Kohler, founder of Eureka Report, as well as Nathan Bell and John Addis from Intelligent Investor. You'll gain the insights and strategies that will keep you ahead of the curve. Visit investsmart.com.au/events.
Okay, first question from Lachlan. What did you make of the Allen government's announcement this past Sunday to effectively double the number of homes in Melbourne in the next 27 years? Brilliant plan to solve the housing crisis in 30 years, or insane thought bubble that would only make Melbourne even more impossibly congested and expensive, and has virtually no chance of materialising thanks to already high construction costs. Low available labour force, lack of enthusiasm among the current population for continued high population growth, and an environmental imperative to cut emissions rather than accelerate them by embarking on another big build. So,
can you say both of those are right?
Well, look, yeah, of course, we did see the Allen government's plan in Victoria to build a whole lot of houses.
Yep.
My thought about that when I saw it was, well, yeah, but the government doesn't build houses.
Yep.
Builders do.
Yes.
And developers develop them. And so they can release as many lots as they like.
Yeah.
But, that doesn't mean they'll get built.
Yeah,
So,
we should say, Alan, that the Minns government in New South Wales delivered their budget and they got a massive property tax windfall and ploughed basically all of it, $6 billion, into their own social housing, affordable housing program. So, I guess the point is governments have got to do something about this. Not only have they got to do something, they've got to be seen to be doing something. So I get Lachlan's point. It's going to be hard to deliver, but governments have just got to keep whacking away at this.
Yeah, but I get really impatient with all these governments doing different things. This is a national problem.
Yeah, true.
And I just think it should be coordinated.
Yeah.
They ought to, all these governments running around doing different things and, so it's going to be different in Victoria and New South Wales and Queensland. What are they doing? And South Australia's doing something else and WA and Tasmania's apparently doing nothing. And, come on.
Get it together.
Get it together.
Yeah, I agree.
And really, the Albanese government ought to be doing something. And I had my piece
they are.
in the
1.2 million homes over 5 years.
Yeah, but that's the same empty promise. They got no. I mean, the National Housing Affordability and Supply Council has already said that that's not going to be met.
I know, but isn't this a case where you throw enough darts, some of them are going to stick? Or throw enough mud and some of it's going to stick and, we'll get somewhere?
Look, I must say, I had in my piece yesterday this idea. I think what should happen is we need an AEMO in housing.
Yeah.
So the Australian electricity market operator, their job is to balance supply and demand in electricity.
Yes.
To keep an eye on it and make sure that there's always enough electricity supply to meet demand. And they spend their life forecasting demand and looking at what supply there is and what's coming on and what's going out and thinking about and then doing something about it, right?
Yeah.
So we have this National Housing Affordability and Supply Council.
Yes.
But they've got no teeth, no power, and they've got no staff, right? AEMO has 1,000 staff, more than 1,000 staff, and they do tremendous amount of work. What we need is this council to actually start looking at and start having actual power to do something about and to plan housing supply against demand.
Yeah.
And ensure that, because the problem is not, so what's happening is governments are coming out and saying, we're going to build X number of houses. Jacinta Allen says 2 million houses, Anthony Albanese says 1.2 million houses and all this stuff. It's got no basis on reality in terms of what's needed, right?
Yeah.
So is that more or less than we need? Is it?
Yes,
how does that relate to forecast of demand?
Yeah.
There's no coordination. Whereas AEMO in electricity and energy, they coordinate the whole country. So look.
Although how's the transition going?
Oh, well, I mean, look, we have at least got somebody whose job it is to make sure
True.
we don't have blackouts.
Yeah.
You know,
Yeah, no, good point.
that's their job.
Good point. All right, Marshall, if the ASX 200 is losing so many good companies due to buyouts, does that impact the ASX 200 index price?
No,
No.
it doesn't. As companies leave the ASX 200, other ones replace them.
Yes.
And it's rebalanced.
Yes. So the weighting of the companies that remain can increase. But yeah.
But there's always 200 of them.
There's always 200, indeed.
James says, how late is it too late to take out a mortgage? I'm 40 and I've just taken on a whopping 30-year mortgage. My wife and I have reliable work, but I do worry that it's getting a bit late. Your thoughts? Well, you'll pay it off by the time you're 70. Excellent.
Yeah. I mean, I take James's point, but I think this is going to be a more common issue, isn't it?
I think the average mortgage term,
Yes.
is 5 or 6 years.
Yeah, because people go get a new mortgage.
Yeah.
Swap. So
very few people sit on the same mortgage for 30 years.
yeah. So don't worry, James. You'll probably have another 6 mortgages over the next 30 years. So worry about those ones. No, I don't. Yeah, I can't see. Most of us are going to be working till we're 70. So
Yeah, that's
should
right.
be right.
Don't worry about it, James. You'll be right.
Yep. Anthony says, on housing and making it affordable, why don't we implement a super profits tax on houses? So a much higher tax rate for profits above aggregate inflation for the number of years that a property was held. Surely this takes the incentive out for investors and refocuses this asset class for living purposes and not speculating, while not penalising sellers who don't make a profit.
Well, maybe the first thing would be to remove the discount on housing,
Yeah.
which is the 50% discount on the capital gains tax. So that might be a start.
Yeah, I was thinking about this question, Alan. There's something implied in here that investors are bad. The housing market needs to be made up not just of owners, but it also needs to have renters. Like, we need investors doing their thing
Sure.
to provide rental stock. So, yeah. Anyway,
I don't
just a
think
thought.
so. Anthony, I agree with James. I don't think that putting some sort of big profits tax on housing is going to really make anything better.
No.
It's going to dry up supply for renters, really.
Now, just before you start the next question, Alan, I'll say there's a few questions about decentralisation and your discussion last week about farmers who struggled after World War I. So we might collect a few of them here.
Okay.
You go for it.
Well, shall we read them all?
Yeah. Well, Ian's saying that we've mentioned decentralisation's efforts and that they've largely been a failure. He's saying that in Albury, Wodonga, where he's from originally, he's actually been amazed at the growth in that city over time. Peter wanted to make a comment about the struggles that farmers had on. Peter and Kathy, I think, wanted to make comments about the struggles that farmers had coming back from World War I. And both made the point, I think, Alan, that these farmers were often given unsuitable patches of land, either too small, poor positioning, poor economics, I guess, of that land, and that was a contributing factor.
Yes. Well, look, the only point I was making was that decentralisation in general has not been successful in Australia.
Yeah.
Efforts to decentralise our population and to prevent them crowding into the cities have been going on for more than 100 years. And so it's nothing new, efforts to decentralise. They weren't even new in 1972 when Gough Whitlam had a go at it. And the problem I was saying was that we don't have enough water. Australia is an arid country, and it's very difficult to build inland cities. So the cities in Australia are crowded on the coast for a good reason.
Yeah.
I think it's no good trying to pretend otherwise. And Albury Wodonga is the exception. Perhaps it's true that it's become a big city and it's been quite successful. That's great.
Yeah.
But it's the exception rather than the rule.
Yeah. I'm going to summarise Philip's long question for you. because it's about housing, Alan, and I think the people want to hear from you on housing. So it's an interesting question that asks, essentially, do you think the increasing availability of money, of bank debt, to buy a house has had an impact on house prices? So Philip goes through, when he bought a house in the 70s, the bank would only lend up to 80% of the bank's valuation, not what the person was paying for the house, and they'd lend it 3 times the male salary. The woman's income wasn't included. That's all changed. Capital rules, Basel III capital rules favour house lending. There's a lot more bank and non-bank lenders, lots of different types of loans you can get, lots more participation in the market. So has the availability of credit pushed up house prices?
Oh, totally. I mean, it's a very simple answer to that complicated question. The answer is yes, absolutely. I mean, and one of the factors that isn't mentioned enough is the switch in banking from salaried staff bankers to mortgage brokers.
Yeah.
And so mortgage brokers so what's happened is that the whole business of lending, particularly housing lending, has changed from being rationed to being marketed. So banking has become a marketing, it's all become marketing, and in particular mortgage brokers, their job is to sell loans in order to get commission. And so they get a trailing commission from the loan. They get an upfront commission and a trailing commission. And their livelihood depends on selling tons of loans.
And so well are the brokers doing at the moment. We're actually seeing the banks try and match this by that the banks put a bunch of Royal Commission era restrictions on bonuses that bank staff could get.
Yeah.
They're taking those restrictions out because the bank staff are seeing what mortgage brokers are earning and going, I'll have a bit of that. And they're either leaving to become brokers or they're revolting about how little they're being paid. So
and there's two sets of commissions actually helping to drive up house prices. One is the commissions that mortgage brokers get, which is based on the size of the loan, right? We should remember that.
Yeah.
So their livelihood is based on the loans being large.
Yes.
So the larger they are, the more money they make.
Yeah.
Whereas previously it was, if you were paid a salary to sell a loan, then it didn't matter to you how big the loan was. And the other commission, of course, is the real estate agents.
Yeah.
So the higher the price that they manage to achieve, the more they make. And now we've got buyers advocates. Buyers advocates also making a percentage.
Yes.
And now we've got, I learnt the other day, sellers advocates, or vendors advocates, right? So I was looking at a house recently where the vendor had both the real estate agent and a vendor's advocate, right? And each of them was paid 1%.
Right.
So the total percentage commission on the house was 2%.
Yeah.
Split between somebody who was called the vendor's advocate, and their job is to go and find a real estate agent and to work with and to help, to act as an intermediary between the vendor and the agent. And the agent getting 1% as well. Well, and then the buyer of the house has usually got a buyer's advocate now.
Yeah.
Also getting 1%. So there's all these commissions, right?
Yeah.
All depending, and so everyone's livelihood depends on the house being worth more.
Yeah. Yeah. Show me the incentive and I'll show you the outcome,
says Charlie Munger.
Yeah.
Correct.
I've hogged the questions a bit there. We're up to Miles now.
Miles, how do Australia's ETFs compare to that of the S&P 500, constantly referred to by investment professionals as the benchmark in the US? Obviously, a larger index avoids the problem of out-weighted buying the index itself. So being a larger market, not having the problem of large money chasing a smaller number of stocks, should we Australians be looking at the S&P? Put simply, would you bet the ASX 200 or the S&P 500 to get the best return over the next decade or more?
Easy, S&P 500. I mean, think about where the world's going. What's it going to be about? AI, technology. Australia's got a few players in that area, but not many of them are listed on the ASX. I mean, I think the era of American exceptionalism is not over. And ours is a more old school economy. Miners, banks,
yeah, but he's
industrials.
asking about the number of stocks, right? So your preference for the S&P 500, It's got nothing to do with the fact that there's 500 companies in it versus
not at
200
all.
in Australia, right?
No, not at all. Well, and particularly at the moment, because only a few, very small number of companies like Nvidia are driving the market.
Yeah. So if you buy the S&P 500, you're really just buying Nvidia.
Yeah, at the moment, that's true. That's true. Pete says, I'm hoping you can help me understand dual listings. I'm a shareholder and fan of Telix Pharmaceuticals, who are proposing to also list on the NASDAQ. For them to be considered in a NASDAQ index fund based on market cap, how is their market cap determined? Does their listed market cap on NASDAQ only refer to stock on NASDAQ or their total value? In their press release, they state the target size of the offering is $200 million above gross proceeds. What does this mean? Does that mean my question above in that... or does that answer my question above in that their market cap on NASDAQ is a paltry $200 million US? Well, Peter, there's a bit to this answer. I can tell you don't need to worry about it because the Telix's attempt to list on the NASDAQ fell over last week in sort of inglorious / amusing circumstances. The problem they had is that the shares have rocketed up in the last few months, and American investors got worried that all the good times had been baked in and they wanted a discount on the shares. Telex wouldn't do that because it would hurt their Australian-listed investors, and so they abandoned the NASDAQ float for now. What does
Telix do? I forget.
They have treatments, sort of cancer treatments. I can't exactly remember, but it's an up-and-coming biotech, really interesting company, Melbourne-based, sort of following the CSL model. Doing great things, but the company's been very successful, almost too successful, and that stymied their NASDAQ listing. So, Pete, you don't have to worry about it.
Stephen, thanks for your weekly educating and entertaining podcast. Some LIC with negative performance are now paying partially franked dividends instead of fully franked. I assume it's because the profit reserve has dwindled. However, I do not understand where the unfranked part of the dividend comes from. If it was retaining earnings, there would be franking attached, and it would be illegal if it was capital return. What they're coming from, Stephen, is from investing in companies that don't pay tax.
Yes,
for some reason or other.
Yeah.
Whatever it's
the company's dividends that
the companies
aren't franked don't come with full franking.
That's right.
Yeah.
So an LIC is in the hands of the companies that invest in.
Okay, Kevin says, love the show and listen every week. Thanks, Kevin. The unemployment number appears to be falling according to the published numbers. I work in technology and banking, and the number of previous colleagues and associates out of work is the highest I've ever seen. How can so many appear to be out of work or struggling to find work when the number is so low? The published number does not appear to reflect the reality. If I lost my job, I would not enrol for JobSeeker as my partner works. How would the government know I'm not working? How is this figure calculated?
I don't know.
Well, I think Kevin's right. You do have to be looking for work to be captured in the unemployment numbers. And so maybe some of those people that Kevin knows personally have not officially sort of entered the statistics yet of the unemployed. They're probably not claiming benefits. Maybe that's part of the
But it's true.
issue.
In order to be counted as unemployed, you need to be looking for work.
Yes.
And that's it. You need to have worked less than an hour, I think.
Yes, that's right. So, Kevin, you're right. There might be a bit of a lag in the numbers. Perhaps what you're seeing will eventually show up.
Well, that's it for this week. Thanks for listening to today's episode of the Money Café. I'll be back next week with Stephen Main. So send in your question and we'll answer it together by emailing themoneycafe@eurekareport.com.au. Until next week, I'm Alan Kohler, founder of Eureka Report and Intelligent Investor.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review. See you soon.